It is slowing, but investors have to remember we're coming from a very high base in terms of the data that we have seen last year and at the beginning of this year. So not to be too much of a surprise if we do see weaker numbers. In terms of some of the measures that the government themselves have been taking, given the overhang of the trade-related issues, the uncertainty there, given the deleveraging process, you can see that the Chinese government is looking to probably add further accommodative policies.
What does that look like?
Well, it won't be anything like a massive surge in liquidity like we saw during the global financial crisis or indeed 2015. It will be tweaking around the edges. But what we haven't seen, Dan, and we were expecting this, is a pickup in the capex cycle. And so many company management teams are kind of saying, you know, we're a bit hesitant in terms of reinvesting into the business. And then this could then have a knock-on effect into productivity growth, could have a knock-on effect into the real economy. And so that's what we really need to be mindful of.
Okay, so how significantly could growth slow? I mean, if you have a look at GDP now, 6.7%. What's next, and how do you see that figure transpiring, let's say, over the next 12 to 18 months?
Well, it's definitely trending downwards, but as we've recently seen, if it goes beyond a point where the government is a little bit concerned, they'll implement some kind of stimulus, and we've just seen that in terms of the infrastructure support. So traditionally speaking, fixed asset investment spending and a focus in terms of a pickup in FAI is sort of like the buffer the government uses for any perceived further slowdown in growth.
Let's talk about the currency as well. I had a conversation with an official from the IMF last week who said that the IMF is very confident in its view that China is not manipulating the yuan. But if you listen to the likes of the US President and the Treasury Secretary, they certainly do not agree. They believe that China is devaluing its currency to its own advantage in the Sino-US trade war. So where do you think the yuan is going, and is China perhaps pressing the pedal on assisted devaluation?
Well, the currency in terms of the range will probably be range-bound in terms of the movement. In terms of whether they're manipulating the currency, I think given that the overhang and, again, this uncertainty regarding the trade issues between the Americans and the Chinese, it's not in anyone's favour for them to be doing that. And also the government needs to be therefore mindful with, you know, their own currency, what happens to capital outflows. So already some Hong Kong retailers are saying we're not seeing the spending that we've been seeing because the Chinese mainlanders aren't spending like they were previously. So that will also be something that they need to consider.
Credit expansion has been quite intense in China. Are we at risk of a major credit event, do you think?
Well, the whole deleveraging process, so after we saw decapacity in terms of supply side reforms, after we saw, for example, getting rid of all that excess in terms of the property market, we then moved on to the deleveraging phase, and we've been in this phase. But what has happened is that, you know, going back to corporates and wanting to reinvest, because the cost of funding has been so expensive, again, you've had this pause. And so when we look at the recent actions, and we do think the government's going to be more accommodative, by the way, before they were sort of having this flexible policy approach, we'll tighten here, for example, in certain areas, we'll ease here. It's likely to be much more accommodative across the board. But this whole deleveraging process, they still have time on their side.
I think the reason I asked that question is because talk of a hard landing also seems to have come back into the market vernacular. And I mean, that seems like far-reaching, perhaps not something that's, you know, on the horizon right now. But is a hard landing still a possibility in China? Is that something that you're thinking about in the office these days? And why is the talk of a hard landing come back?
No. Well, the talk of the hard landing is because there's still this uncertainty with the trade issue. But no, we certainly don't think there's going to be a hard landing. The Chinese government still has a lot of tools at their disposal in terms of managing the economy. But again, I do want to, you know, re-emphasize that the slowdown in the data we're seeing should be expected, given we're coming from a very high base. And the problems, or the perceived problems, that the market is pricing in, it's not really impacting the real economy at this point in time. The trade issues are still weighing heavily on sentiment.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.